here's what's going on. Back in 2021, there's this terrible collapse of a building in Florida. From that, people died. I mean, it's just terrible. So Fannie Mae turns around and says, you know what? We need to be a little tougher on condos.
Welcome to the latest episode of We Fixed Real Estate. Fred, how's it going?
Good, Drew. How you doing?
Doing okay today. We've got a pretty important topic coming up, especially if you are curious or want to buy a condo.
Yes, this is the episode we'll call We Fix Condos, or at least help you fix condos. So here's what's going on. Back in 2021, there's this terrible collapse of a building in Florida. And from that, people died. I mean, it's just terrible. So Fannie Mae turns around and says, you know what? We need to be a little tougher on condos. So they started asking, as you might have heard if you listen to this regularly, that you need a reserve study done within the last 3 years so you can ascertain what it is. And 10% of your budget has to be for reserves at a minimum. So Fannie Mae went through this for a while, and they've always had these two things: full approval and light approval. And they did this because people were putting so much of a down payment that it wasn't a big, I mean, it was a big deal, but it wasn't a big deal. So that's why they thought they'd try to make it easier. Well, it turns out it doesn't matter how much you're putting down. A crappy condominium is a crappy condominium. They ascertained there's about 170,000 condo associations in the USA that have 10 or more units. And that's one of the important things about their new rules. This is for units 10 units and above. Okay, which is probably most of them.
Yeah.
So there's no more limited review for that, or streamlined review, as Freddie called it. So starting August 3rd, 2026, per Fannie Mae Lender Letter LL 2026-03. So I guess they don't do a lot of lender letters.
That's the third one.
So it's pretty important. And this is what they had to say. Every loan, no matter how much down payment you have. And by the way, you can actually purchase Fannie Mae financing condominiums with as little as 3% down payments, with PMI, of course. And if you get PMI, private mortgage insurance, which means you're putting less than 20% down, the PMI company also has to take a look at things, but they'll rubber stamp it if Fannie approves it, unless there's something very weird. So what they're looking at in depth now is the association budget and the finances, the reserve, any outstanding litigation. And I'm sure that's where they got hurt the most, no matter what your loan to value was, didn't matter. And the master insurance policy. And insurance, as a lot of you know, has also been a really big problem. So if you have 2 to 10 units, you can qualify for what they call the expanded waiver of project review. So small condos get a little better, but let me tell you, back to the 10 plus. First of all, big thing, instead of 10% reserves, you have to have a minimum of 15% of the association's budget.
Wow.
Assessment income annually. It's got to be 15% in reserves, no matter what. So that's a really big one. They're keeping the same criteria that they always had for the insurance policies. The litigation's case to case with every lender. If there's 10 people suing the building, you're not going to have as easy an effort as if nobody's suing. But if the association is suing, say the original developer, that's going to be looked at because it's probably for defects in the building. And if there are defects in the building, what are they and all that? So you basically got to answer all this stuff. We here at Arrivva, when we take a listing, we try to get all this up front because why do you want to have something go under contract? Then somebody goes to a lender, then they get the information from the condo association, and then they find out they can't do it. I mean, it's totally frustrating. So Fannie Mae puts out this form 1076, which is the condo approval questionnaire. And these are where obviously all the questions are asked. And just to give you an idea, they ask the basic project information. They want to know, like the tax ID of the HOA, who the management company is, and their tax ID number. Does the project contain any of the following: hotel, motel, resort, deed of resale restrictions, manufactured home, mandatory fee-based memberships, new and non-incidental income from business operations, supportive of continuing care for seniors or for residents with disabilities, a whole bunch of questions you would never even think about. But Fannie Mae's gone through the process, Freddie too, that they've had foreclosures, and they work backwards and they figure out what caused the foreclosure. So, it's going to be tough. Is everything complete in the whole thing? The conversion, if they were a conversion from, let's say it used to be an apartment, within the past 3 years, they want to know a whole bunch of information about that. How many units are 60 days or more delinquent?
And this is an 8-page document. Does everybody applying for a condo loan have to fill this out?
Yeah, everybody, 10 unit and above.
And who fills it out?
Involved? I'm sorry?
Who fills it out? Is it
usually it's the property management company. But if it's self-managed, usually 10 units and above aren't self-managed. But they're going to have to pull everybody together and get this done. They want to know how many units, how many sold and closed, number of units to investors, all that kind of stuff. I'm just breezing through this, but
so a large condo probably has this, and they just have it already filled out, and they just send it off.
Yes, because they want the name of the preparer, title of preparer, preparer's phone, email, company name, address, and date completed. So they want to know who did this. And there's a whole bunch of questions. And yes, as you said, it's 8 pages. It's pretty comprehensive. In addition to that, there's a list of items that they have to get, like the association budget and all the finance stuff, the copies of the reserve accounts, information about the outstanding litigation. And they have to give up the master insurance policy. What I don't see on here is the reserve study that they're asking for it, which is interesting, but I'm sure it's built into one of the questions, though.
Yeah, I see question 9.
Yeah.
What is the total current reserve account balance, but not the study?
Yeah. So the bottom line is, if you're going to be buying a condominium, it's going to be more difficult to finance, especially buildings that have issues. Those buildings that have issues are going down in value. Okay. The condos basically aren't going up anywhere because it's just getting tougher to get a mortgage. I have a lawyer friend of mine who's representing a seller of a condo in Denver, I think. Yeah, Denver. And he's asking me, well, should we wait? Or I said, get rid of it, because the condo, he told me very simply, the condo is not Fannie Mae available because they have all kinds of reserve issues. There was some problem. This unit owner had to come up with $100,000 for this problem. So it's probably a multi-million-dollar issue, and you can't get financing. So it's worthless. So how many, you went from, let's say, 100 people looking at the property to 4.
Yeah.
Because they're the only people with cash. Or you can, as a seller, become the mortgage company. You can say, okay, in $1 million house, put 30% down, and you then become the mortgage company for the other 70%. And maybe you have it balloon after 3 years. There's kind of no rules there because it's a transaction between buyer and seller. But that's the only way to sell these units. Or there are lenders who don't do Fannie Mae approvals, but you're going to pay out the wazoo, dude. Like 3 points higher than what you get on a normal mortgage, 3%, just to be able to get into these things that are going to keep going down in value. There's going to be eventually the A, B, C, D, E, F ratings of condos. You know, I mean,
like a bond score.
Like the TikTok that says, let's rate cars on their usability. That's a D tier, but yeah, you're going to see the A tier condos. But here's the thing that you as a consumer have to understand: don't look for the cheapest condo fee. Matter of fact, look at the condo that's got the most expensive condo fee, because they're probably in super compliance and they're not going to have a problem. And they're going to have more value down the road. To buy something with it has a low condo fee. That's what screwed Florida. All those condos in Florida, there's like 1,500 of them at least on the Fannie Mae bad list. It's terrible. Add to the insurance problem and
what's a typical reserve percentage? Like, it's going from 10 to 15. Do most condos stay around 10, 12%? So they're scrambling right now to get the reserves up to 15?
I've seen them all over the place. I mean, okay. Let me say something, and this is important for everyone to hear. When you buy into a condominium, there are people who run the condo association who are residents. 9 times out of 10, these are people who've never had any power in their life, and this is the most power they will ever have. But the problem is, do they understand what they need to do to get the property Fannie Mae approved and keep in compliance? They're going to have to raise the monthly or call for X number of dollars from each owner, and it's unpopular. So what I say to everyone is, the last thing you ever want to do is serve on a condominium board. You can go to the meetings and bitch and complain, but do not serve on these boards. It's insanity. Most of these people have no clue about business. They don't really care because they don't want it to come out of their pocket. It's I couldn't think of a worse unpaid job.
I can imagine.
Yeah.
There's no sort of database of showing what these condo reserves are. You're just dealing with it.
No, each condo does it themselves.
You get a new buyer and you're going out and looking at condos. The first thing you're investigating is how healthy are the reserves.
Yeah. I mean, is it Fannie Mae approvable is my question. Listing agents most of the time, you have to check on that. Then I ask for try to get a hold of the management company. It's impossible. They don't call people back. They don't email for days. They take 2 weeks to get the paperwork that's just sitting there in a folder, and they charge you $500. That is such a ripoff. So if you are on a condo board, or if you are a condo member, complain to your board that why should we be paying the property management company as a seller or a buyer for the documents that already exist? They're in a Dropbox somewhere. They just send it over. There's nothing they need to physically do. That is another ripoff fee in the real estate business. It's disgusting. It's stupid. And you're right. There should be like a database. So, at least a database of the documents you put in that there's supposedly somebody who's doing this, but they're not. It's all over the world. It's all messed up. Every condo does it completely different. So there's no continuity in this. So you just got to deal one or another.
I know. So your primary concern is that it's Fannie Mae approved or Freddie Mac approved, but
approvable,
but it's going from 10 to 15. That's a 50% increase in the amount of reserves that they need to have.
Yep.
Now,
for a little while, it's going to be an issue.
Anecdotally, just in your experience with all the sales you've had, are these reserves typically in the 10 to 15% of the budget, or are they more like 25, 30?
For a good condo, yes. There's some even higher.
Are there is it common to see one at 25%?
Yeah. Yeah. A
I
really
guess an
good
older
building.
condo, if you don't use it, you fund it, and it's appreciating in some ways.
Right. And what we're talking about here is a percentage of the entire budget. Okay, so if their budget's $1 million, it's got to be 150,000
Okay.
in reserve
And
budgeted to collect that year.
And budget from somebody that doesn't own a condo, budget being like the cost it takes to operate or fix the condo.
Yeah, like here's an example. You're in a condominium, it's a bunch of different buildings, and there's roads, there's the physical buildings themselves, the facade, let's say it's all brick, the roof. All those things come under the condos, elevators, they eventually break. So that's what the reserve study is for, to figure out in how many years do you need to come up with X number of dollars. Like 20 years from now, you'll need $300,000 to put on a new roof. So therefore, they take it mathematically and figure out what everybody should be putting in today so that they have that money 20 years from now. That's what the reserves are.
That's helpful.
Yeah. And also, you're still paying a premium in rate for a condominium just because. Fannie Mae, Freddie Mac, you're always going to be more expensive for a condo.
So your 30-year mortgage is different if it's a single family home versus a condo.
Absolutely. Absolutely. It's crazy, but it's risk management or something like that. So, but yeah, the bottom line is, if you're listing your condo, tell the listing agent, get all this stuff in advance. And then you'll know if it's financeable or not. Because if it's not financeable, it's probably not worth listing. Yeah. And obviously, if you're working with us, we get everything anyway.
Because you're full service. And as part of the full service thing is you've got that in order. So if anybody asks, is this condo I'm selling have the reserves, you can just show them that information.
Yeah. And I can also, we're mortgage brokers. I could also pop this over to one of my lenders and say, hey, is this going to fly? So that's another thing that's good. I mean, if somebody like Chase or Citi is holding their own paper and not selling it to Fannie Mae, there's a possibility they might do something. But again, that's on a case-to-case basis, and they're usually going to mirror Fannie and Freddie, and they're going to be tough. But again, we broker it to Louis Mortgage Brokerage and Knee Repair Shop. You're going to pay a high rate. Yeah, you want the condo? Yeah, you pay for the condo. Watching too many Sopranos clips that come up on my TikTok feed.
That's funny.
Yeah, I got my Paulie Walnuts hair on.
That's funny. So this will be on the mortgage page for Arrivva.
Yeah.
The stuff coming out August 3rd, which is going to be, something you're going to want to check out, and also the form in case your condo association doesn't have the form. But it's nice for you to look at the form even though you're not going to have to fill it out.
No, it's weird. Some lenders will want their own form. It's the same exact questions. It just has their logo at the top. It's stupid. But the worst case is you might have to redo it onto their form. Big deal. But get it done, get it ready, have it disclosed to everybody up front so everybody knows about it. It's the easiest way to do this so you don't have people upset later down the road. It's like fully underwritten pre-approval, getting the insurance cleared, getting the property cleared. So it's the big three of the pre-approval, pre-insured, pre-condo approved. There's better words for all this, but we'll come up with
fully underwritten pre-approved.
Fully underwritten pre-approved. Exactly. I see this. The loan officers are now hiring idiotic agencies who are selling them something for $29.95 a month. Oh, post this on LinkedIn. I see the same exact thing post 17 times from 17 agents or 15 mortgage people, the same thing. They're all, what's the difference between pre-qual and pre-approval? Well, it doesn't matter because you need a fully underwritten pre-approval, which is apply for a mortgage without a property. That's really all it is. You're giving all the documentation, pay stubs, W-2s, bank statements, photo ID, firstborn. Whatever they want. You get it approved, it's done. You're done. And if you're buying in San Francisco or Cupertino or any other crazy market and you're not fully underwritten pre-approved, don't even bother writing a contract. They'll just laugh. So what you think as a buyer is just going to be okay is not in certain markets. So why not be fully approved? Why not get it over with? I'm sure there's procrastinators out there will have an issue with me, but c'est la vie.
Well, that's
anyway, yeah.
advice.
So Arrivva.mortgage, and we'll have all the information about this, and you'll be able to download the Fannie Mae 1075, which is that approval for your condo. Hey, and if you live in a condo, get the 1075 now. Take it over to your management company, have them fill it out, just so you guys know what's going on. Just without even somebody applying, just get it done.
They might already have it.
Yeah.
Maybe. I mean, I can see if you're in a 100-unit condo, they probably have it because units are getting for sale all the time.
You'd be surprised.
Really? I can see like a 12-unit one where everyone's lived there for 10 years and nothing's come up to market. Maybe it's.
Again, they're all going to be different.
Definitely get that duck in a row before you list your condo.
Yep. Condomania.
This has been very interesting episode for We Fix Real Estate. If you are involved in the condo space, that's what we got today.
And that's all there is.
There might be more, but we forgot. So tune in next week and we'll remember.
Yeah, we'll figure it out. Oh no, we got a special guest, I think, next week.
Yeah. Oh yeah. We got to hype that.
Yeah. Assuming he can make it, and we haven't 100% confirmed, but we got somebody who can tell you how to appeal your real estate taxes.
Oh, that's going to be great.
It's awesome. Awesome stuff.
I'm excited for that one.
Yep.
There it is.
Go, Drew. Give us a good out.
That's it. I can't beat this awkward close. That's all I got today.